What's up, guys? It's Warren here again. And so in this video, I'm actually going to be going over some of the most important candlesticks that I use. So there's a lot of candlestick patterns and all of this stuff, but there's only a few that I actually care about, right? And so yeah, I'm going to start. I'm going to that right now, right? So I'm going to share my whiteboard, right? So let me share the whiteboard. Okay. So what you're seeing here is the whiteboard. So there's a few things that I focus on, right? So let's go. Number one, right? What is a bullish bar? Bullish, bull, bull bar, right? So a lot of people actually is they consider any bar a bullish bar as long as it's green or blue, right? If it's going up. And if they consider the red bars as bearish, no matter what it looks like, because it signifies that price moved down. But it's not actually true, right? There's so many bars that are literally you shouldn't even consider them, right? I mean, maybe based from my understanding, I don't consider a lot of price action bars, just the big ones, the important ones, right? Okay, so the bull bar, right? So let's say we have a bar going up. Let me actually get some nice. What color is that bar? So I think it's green, right? Green and red, right? So we have a bar with a bit of a wick, and then we got another bar, right? We got this is some price action patterns. Right? Then we got some red bars going down, red bars going down, some wicks, all that stuff. Right? Now, when I look at price action, right, I want to see a proper bullish bar, right? Bullish bar will come like this, right? And it doesn't, so this, you could consider this like an engulfing bar because it engulfs all the rest, but it needs to be compared to all the previous bars, it needs to be a nice big bar, right? At least bigger than all the rest of them. That's when I consider this a good bullish in one bullish confirmation, right? Because you still got to have like breakup trend. Let's just say you have a strategy with like five confluences, right? Breakup trend line, support and resistance, big bullish bar, and then all of those things line up. You can't only take one bullish bar as a confirmation, right? Because then it will decrease it dramatically. Can't just rely on one bullish bar. Right. So this is very important. And then obviously the reverse of it is true, right? And then if we have a nice big red bearish bar compared to all the other previous bar, all the small bars, I consider this a good bar, right? So bullish bars has to be bigger than all the previous price action, and then a bearish bar has to be bigger than all the previous price action. That's when you know 100% it's a good bearish bar based on, I mean, everything is probability, but we need a bar like this, right? Second bar, right? So let's go back. Is what I call a pin bar, right? Pin. So the pin bar needs to be, let's go for the bullish pin bar. I need to see a nice long wick, and then people call this a hammer, I think. Um, I need to see a nice close above here. The wick must be long compared to our previous price, and it mustn't be like sitting. Let's just say you had bars coming up here, bars coming up here. Now this wick sits like inside all the previous bars. So it's not really a good bar, right? What I want to see is that price is moving and then deep down, there's no previous price action in this area and there's a big long wick. So this means price is likely to go up, right? So that also means price is coming down, down, down. Uh, no, actually, price is coming up, 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 up. And then there's a big empty space here. And then boom, nice inverse pin, right? and then price likely to go down. Okay. Now the probability of this working is not 100% also. We have to line it up with confluence, maybe break up trend line, forms this bar, maybe it comes back a little bit up and then boom, starts dropping. Right? Not 100%, or maybe 70, the probability maybe 70% of the time. Right? So the pin bar is extremely important and the big bullish bars are important. Right? So even when, and then the engulfing bars, which is like this bar here, and then I see an engulfing bar, right? Engulfs the previous candle. This is okay. When it's not okay is if you see this, right? Big red bullish bars, big long bullish bars, big long bullish bars. Maybe it's losing like strength, right? And then you suddenly you see, okay, even let's make it another small bar here. And then you see this here. So it engulfs this bar, but compared to all the previous bars, this is nothing, right? I mean, it is showing a little bit of bullish trend, but to me, compared to all this, I don't like it, right? I'd rather see something like this. Okay, something like that. Compared to these bars, almost the same size, right? And it engulfs a few more bars. So you know, okay, this is a good confluence, right? Engulfing bar. So not pin bar, engulfing bar, right? So I should actually put some text in engulfing, engulfish, engulfing. I never spelled that right, but anyways, spelling isn't important. What's important is the theory. Right? Mm, so yeah, big long engulfing. So when I see something like this also, I wouldn't enter right here, right? Maybe I'll wait for a bit of retracement somewhere here, and then maybe a stop loss will come here, right? But obviously, based on maybe a break of trend line, all of the stuff, we will slightly come down here. Sometimes you get a second bar, then boom, goes up, right? So pin bars, engulfing bars, and big bullish bars, right? Like this is another example. So small bar, another small bar, right? Now you get this big bar. What do you do? Right? Price went up all this way. Now there's a big bullish bar, right? So this is actually like a gain of momentum, and the higher probability is that it keeps going up, right? Until you see maybe you see another bar like that, and then finally you'll start seeing bars, and then you'll see maybe a red candle, and this is never the first indication to sell because you'll see not never, but it needs to line up with all different confluences and stuff, right? You see another bar, it gets smaller, smaller, and then you see another red bar, and then maybe it reverses, right? So yeah, those only like three bars that I actually care about. I know some people talk about dojis and all this stuff. I mean, they can be significant, but the more stuff the more stuff it can just be very complicated, right? Sometimes it's better if you have a strategy that just focuses on one bullish bar, check. Then you line up with the other confluences, check, right? Instead of you keep saying this is a doji, then this is a different pattern, maybe a double doji, or what they call some wave or something like that, right? Another thing they call this some kind of wave. Uh, so to be honest, I don't really care about all of this. Right? I just focus on my strategy, what's important, and what makes sense to me. Right? So yeah, there's like only three things I focus on: bullish and bearish bars when they are big, right? Because I know when even price retraces, probability of it coming here is always very unlikely. It will sometimes, but it's more of the chance where it comes maybe to the 68% fib level, which I'll cover in another video, and then does some kind of red price action, make some patterns, and then boom, drops, right? So bullish bars, pin bars, and engulfing bars. Okay, so if I let's open up the charts, I'm gonna share the charts, right? So I like to focus on 5 minute time frame, right? The higher the time frame and the bigger the bars, stronger the confluence, right? So if I when I look at 4 hour bars, let's go to 4 hour bars. Right? We'll start at January, January the 1st, right? And it's also important for previous price history. That's also very important, right? Like you'll see this, right? Uh, like you can maybe see this as some kind of support and resistance, right? So there's some manipulation that happens. Like you see this bar here, and you see a nice pin bar. So when you see a pin bar, but inside of another bar, it generally means it's some kind of rejection happening here. It's pushing price up, right? So these kind of bars are strong, but not like the best indication, right? Because it's still trying to sell, until finally the sellers give up, right? I know ICT talks about. Okay, no, I don't want to mention anything, right? I'm just gonna focus on my bars and my strategies, right? So yeah, so these bars are valid, right? Uh, yeah. So you can see that price came up in a big long bullish bar. Expect price to go higher. Obviously came to support. So a lot of people actually I have a feeling this is some kind of manipulation, then boom, drops, right? But if you look at like better price action data, see it's small bar, small bar, small bar, now big gain of momentum. And this bar here, like what I said, you look at this bar here, price came up, make another bar, right? And then inside of this bar, what can we expect? Because compared to the 1, 2, 3, this one's the biggest one, price retraces into this bar, and I told you it wouldn't come here, which it didn't, and then it forms another bar. It keeps going up until finally, boom, bearish bar, right? And if you consider this the bearish bar or bearish engulfing bar, now compared to all the price actions, all the big ones where it actually moves, it's valid, right? So what happens? It comes down here, and then what it does, it retraces inside this bar, right? But it doesn't come up here because of this strong selling moment. It comes down here and then boom, right? And then when it tried to come up again, came up, and then what happened? It got rejected. It didn't come here, and it came back down. Until finally, I think a news event happened and boom, it invalidated this bar. And now we got a huge bullish bar. Now, when you see these kind of bullish bars, look at all the red bars, all these red bars, and this bar is the biggest bar since the previous year, actually. So for months, it's just been chilling with small bars, and until finally, boom, bullish momentum is in the market. And what happens? Goes all the way. Right? If you see this bar, boom, goes all the way, right, until finally it comes down. But it doesn't want to come here because of the bullish strength. It comes back to maybe 68, 61.8% level, fib level. Then it comes back all the way up, right? Bearish bars. See this one, boom, bearish bar, and then what happened? It started bars, 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 bars. We started to lose momentum, right? Bearish engulfing, engulfed all those bars compared to all previous action. This one is almost similar to that. So price comes in inside here, almost like the 68% level, and comes all the way back up. Comes all the way back. So this one actually invalidated this bar, but it still went up, right? So the probability of it working is very high, right? See this one here? But this one is not a true bearish bar because there was selling pressure. Those wicks represent selling pressure. So it came up, but it closed like almost uh, two-thirds, and this drew all those wicks. So when it came to the wicks, it dropped, dropped, dropped. Right. So these are the power of bullish bars, right, and bearish bars. Like when you look at this, all small, small bars, small bars, small bars. So when we actually look for a nice big bearish bar like this one, price moves down, right? And then when you find compared to all these bars, boom, bearish bar doesn't invalidate the bar, comes down here, goes up, right? Big bearish bar compared to all the previous price action, price comes down inside it, boom, goes up, right? This bar here, huge bearish bar, price comes up, doesn't invalidate it, goes all the way back down, and then just try again. Right? Big long bearish bar, doesn't invalidate it, comes inside the bar though, goes down. Tries to come up here. This one came down. You can see it didn't invalidate it yet. It came back up, but then there was too much of selling pressure, and then boom, finally it invalidated it. Right? This one here, engulfing bar, goes all the way up, comes down, doesn't even come near the bar, and then boom, comes all the way back up. Right? We look at previous year's data. Let's see what we have. See, huge bar. This is a massive bar. I think this was CPI. This was definitely CPI. I trade this market so often that I just remember what happened there, right? You can see that for like the whole month, it didn't invalidate this bar. I just been playing, 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 and then finally at the bottom here, it struggled, right? It came to probably like a 68, tried to go up, oops, invalidated finally, right? Then if you see here, this massive bearish bar, it didn't ever come back up, right? Because compared to all the previous price action, uh, it's like see whenever this bar came into that bar, boom, another bar. And when you see this bar, it just dropped, right? Didn't even come back into it. I'm sure it did at some point. Let's see. Yeah, see it. Well, this one it got invalidated, but it still dropped, right? If you look at the peak of this, right? So compared to all these bars are small, 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 small. Finally, a big one. Right? Tried to come down, but there's the real big one here. Because you see this one has wicks, closed around two-thirds of the way, and then boom, this is a nice bar, right? This is a little bit of wick. And then when what happened? It went down. Right. Okay. So those are bullish and bearish bars. The next bar I'm going to go over is pin bars, right? So I said there needs to be like a gap when a pin bar happens, right? Like see this pin bar here. There's a big wick and it closed down here, but this previous price action it doesn't go like above here, right? So then come down, come down, come down. All these bars, you can see these wicks, but there's like previous price action here, so these are not really too strong, not truly strong, right? And then we come down here, we come up here. This one's a tiny one, right? There is a little bit of gap, so it works a little bit, right? But when you look at the big ones, right? Like, so this one's not just one like a doji looking thing, so I don't really care. Comes all the way up, comes all the way up. Right? And then this one didn't work actually, right? Because it didn't actually give any selling signals. And then this one's actually a close. This one's a bullish bar. Not really a bullish bar, but it opened here, closed halfway. So, and it didn't actually close black. So it's not really a very strong bar. Right? And then we come here. This one has this wick. So it's not really truly valid because if you look at this only like that much of gap, right? We'd rather prefer something bigger up there. Now the next bar, there's this big gap here, right? A long tail. And then what happened? It dropped, right? So if we come here, so here's a long one, then what happened? It dropped for a few bars, right? If you look, let's see if we can find another one. This one here, yeah, this one here. See, big long pin, and it's a red candle, so it's a bullish. It's a gap here, big gap. And it doesn't invalidate it. What happens? It goes up, right? Big. Okay, this is a big bearish bar. Right. But this one is actually a pin. Right? This is a big gap here, but probably some manipulation in case you put your stop here. But then boom, it dropped, right? This one's a huge bar, like compared to all the previous price, a long tail pin, and then what happened? It moved up, right? And then pin bar worked. Well, this one's actually not a good pin bar, so I wouldn't even use it. Right? This one's huge, right? The amount of gap between here to this pin bar is huge, right? And then boom, all the way up, right? Let's see. So in here, well, actually, this bar is valid, but it didn't work out. This bar is also valid, and it didn't work out, right? So, but the probability of it working probably like 70, 30%, right? 30% you lose it, doesn't work out, and 30 means 70% works out, right? But if you actually look at the lineup, the confluences, there's huge like bearish momentum and all this stuff. So it didn't really even break out or do anything. So you can't really have traded it just based on one bar low, if you know what I mean. That's a big pin bar dropped. All right, pin bar dropped. Pin bar dropped. Big pin bar, huge wick, huge gap. Boom, dropped. Let's see. Huge pin bar dropped. Yeah, so that's basically it, guys. Those are like the main bars I focus on, pin bars, but I actually focus more on bullish engulfing, bearish engulfing, big bearish bars and big bullish bars. I just focus on those four actually. Pin bars not so much, unless I see them with a huge wick, then I'll go look into that. Like on the 15 minutes, you could probably see them too, right? Uh, so yeah, see this is a pin bar here, not a good pin bar because it's red, but boom, slow drops. Mm, tiny ones, but they work because they're during the morning session, right? During the morning session, you can't expect big bars. But yeah, guys, I just wanted to go over some price action bars, and then maybe in the next video we'll go over how important trend lines are on the US 100 market. I'm only going to go over this market because I only trade this market. So if you only trade this market, then I mean you can go look at other price action on different pairs, but this one is my pair. So when if you want to trade it and you want to learn from me, then you should follow this, subscribe to this channel, like this video, and there's more content to come. So yeah, take care, guys. Enjoy the rest of your day.